What's up guys, John here. I'm a certified public accountant for over 20 years. I have worked with many successful stock investors over the year. Some of them share with me their proven method of finding and researching winning stocks. Today I want to share a system that is great for any beginners. Please watch the video until the end so you will learn the whole system. I personally use Charles Schwab for some of my stock portfolio, so today I will use their stock report for demonstrations. If you use other brokerage account for your stock, it's okay too, because the information I use today is public information. This information can be found in other stock report, or it can be found on Yahoo Finance or Google Finance. The stock we're going to research today is Lululemon Athletica Inc. So the first thing we'll look at is the business description on the stock report. Here you will see. So the first thing is the business description. And Lululemon is an athletic apparel retail famous for selling yoga pants and other yoga wear. Now, it also sells apparel for running, training, and other fitness-related accessories. Currently, it has 491 stores worldwide. So this gives us a framework and understand what kind of business they do. And so it's very helpful in the beginning. The second thing we're going to look at is the Schwab and Morningstar equity rating. An equity rating is an analyst assessment on the stock future prospect. Some of them they use the number system, from number star system, 1 star being the worst, 5 star being the best. Or they will use A, B, C, D, A being the best future prospect, and E, it's like a sell, the stock is running downhill. So if we look at the report, currently Lululemon on the Charles Schwab report, it's on C, so which is kind of neutral. On the Morningstar, it's currently at 1 star, so it's also on the downside. But don't let that just deter from looking into this stock. This stock, it's a growth-oriented stock which has enjoyed tremendous growth. So we want to dive into it and analyze the number and make our own independent opinion on this. The equity rating is just a reference, So the third thing we want to look at is the price earning ratio, which is also known as the PE ratio. So what is the PE ratio? It tells you if a stock is expensive or cheap. The way to calculate it is stock price divided by the earning. It gives you a multiple of how much investor is willing to pay for the earning in order to get this stock. As of August 28, the PE it's around 90, so which is on the high side. So it can be considered a risk factor, or it could mean that this stock is expensive. People are paying 90 times the annual earning in order to get this stock. On the reverse, you can also think of high PE ratio as people are believing in the future growth of this stock. People are willing to pay more to get this stock. If you watch the stock market, you could tell, like a stock like Tesla, people are willing to pay a lot more to get this stock because they want to see the future. They believe in the future prospect of this stock. The fourth thing we want to look at is the price history chart. So on the prices chart, very important, we want to notice is the trend, right? You want to look at in the past 12 months, is the price going upward or downward? Or some of the stock going like this, sideways, but very volatile up and down. So we want to notice the trend, all right? If the trend is going up, then we know this stock is growing. The next thing we want to look at is the net margin ratio, which is also called the net profit margin ratio. The way to calculate it is the net profit divided by sales. So it tells you how profitable a company is. Preferably, we want this ratio to be over 15%. All right. So Lululemon, the profit ratio right now is at 15%. So which is right on it. The sixth thing we want to look at is return on equity. The way you calculate it is net profit divided by shareholder equity. This ratio tells you how efficient the company is managing the company resources, right? We prefer want to see this ratio to be over 17%. So Lululemon's return on equity ratio is at 36, which is fantastic. They are deploying all the company resources to make the money. The seventh thing we want to look at is earning per share, EPS chart. Same thing on this chart, you want to notice what the trend is. Is it upward, downward, or is it sideways? Preferably, we want this growth to be 25% a year. So on Lululemon, from 2019 to 2020, the earning per share is growing at 34%, which again is a fantastic. The eighth thing we want to look at is the revenue chart. We also want to notice the trend. For Lululemon, from 2019 to 2020, the sales is growing at 21%. Preferably, we want this ratio to be over 20%. So this one, again, it's a positive factor for the stock. So far, so good. We like to see the stock is growing this way. So at the end of looking at all this important ratio, what you want to do is tally up all the positive factor and the negative factor, and then you want to compare. Basically give you the pros and cons of this stock. There's no stock is perfect, right? There's always the risk factor and there's always the upside factor. So once you tally it up, it will help you make a decision. So this is a basic stock research system for any beginner. Try to do this before you buy any stock. It will let you make an informed decision. Okay, I would like to get some feedback from you. Comment below. Let me know how you do your own research and what's your system. And I also do private financial and tax consultation. For any inquiry, my email is listed in the description section below. I hope you learned something today. If you enjoyed this video, please give me a like button and subscribe to my channel. I produce new content every week and plan to do more investment related tutorial in the coming days. So I'll see you in my next video.